Welcome to our look back at some great recent NBR interviews in NBR Interviews. I'm Paul Brennan. Coming up, a damning Financial Markets Authority report calls out fire and general insurers, the New Zealand Cleantech Mission, the book review, and more. First up, local government New Zealand is urging the government to act with more urgency to protect towns and cities from worsening flood events. Its spokesperson said while the government had been focused on reducing greenhouse gas emissions, it had done nothing to help communities to adapt to the impact of climate change. The recent floods in Nelson, Marlborough and on the west coast have given added impetus to concerns that because of climate change, adverse weather events are becoming more extreme in nature and are happening more often. Climate Change Minister James Shaw said that meant new housing developments should only proceed on land which was less prone to flooding. He joined NBR political editor Brent Edwards.
I think there's kind of two categories of action that we need to take. Some of it's forward-looking. So as we, obviously the population's growing, and we're starting to think about, new areas to build on and so on, that we can do that in a way that minimises the risk by building in areas that are less likely to be flood prone in the future. And we've got increasingly good modelling about the places in the country that are more likely to be exposed to those sort of risks. The more difficult is actually your backward-looking actions in terms of existing developments, towns and cities, many of which were built on floodplains, on riverbeds, on drained swampland, and so are extremely, at risk, especially as you get a combination of rainwater coming down and increased sea level as well, and those two things meet in a lot of places where we have towns and settlements.
Are we going to have to look at retreating from some of these towns and settlements?
We are, yes. There's sort of a bit of a process to go through. So, this isn't going to necessarily happen everywhere, and it depends a lot on local conditions. But essentially, there's a choice to say, well, do we simply accommodate it? Do we kind of build up, put our houses on stilts and so on? Do we defend and build seawalls and ever bigger levees and dikes and so on? Or do we retreat? And then the question is, if we are intending to retreat, how do we do that? How do we ensure that vulnerable communities are looked after through that transition as well?
Whatever we do, it's going to cost money.
Yep.
I mean, is central government going to have to put up its hand and contribute quite a bit to that?
We don't know yet what role will be there for central government. I mean, you've got to look at a system that appropriately shares the risk and cost between the property owner, their bank, their insurer, their local government and central government, and that does so in a way without creating more moral hazard and encourage people to take greater risks. That is a process that we're working through over the course of the next couple of years, and we'll be introducing a bill before the end of this term of Parliament called the Climate Change Adaptation Bill, and the idea is that we will try and resolve some of those issues through that piece of legislation.
Yeah, because I was speaking to the Insurance Council's Tim Graff, and he says
Yes.
that legislation is going to be important to sort of setting out a framework for how local governments respond, but also how individuals.
Yes, it will. I think it's really important that people are fully informed, and it's important that each of the actors in the system are really clear about what their responsibilities are. And because we've never really had to face this situation before, those responsibilities are unclear. And so you're at the risk at the moment, with that lack of clarity, of having insurance retreat, which leads to banking retreat, which leaves people with a stranded asset well before the house or the property becomes unusable. And so that is a situation that we are all, banks and insurance industry included, trying to avoid.
But given what's happened in Westport, have you got any advice which tells you that in some places around New Zealand, action needs to be taken urgently?
So we had in 2019, I think it was, we published 2020, we published the Climate Change Risk Assessment, and that was an absolute doorstop, an 800-page assessment of where risk currently falls around the country. And it is clear that there are a number of risks. I think they said that there are 43 key risks that have actually got a level of urgency to them. 43 is quite a lot to prioritise. And that is because there are places that are going to feel it sooner rather than later.
And have you got a plan yet for focusing on those places that require action sooner than later?
I mean, there are examples, right? So we know, for example, at Granity on the West Coast, the local council there is giving rates relief to exposed properties to move to a different part of town where they've reserved an area for essentially redevelopment, new development for people who want to move. You had the situation up at Matata, of course, which wasn't really climate change related. It was more to do with simply siting of property near a river that was prone to flooding. But that gave us quite a lot of lessons about what to do and also what not to do in terms of how you deal with a managed retreat situation. You've had severe flooding.
You've had managed retreat too in Christchurch following the earthquakes. I mean,
yes.
Different reason, but...
We did, and actually the Christchurch, what happened in Christchurch, I think, has actually provided us with quite a useful experience base. Again, both things to do and things not to do in terms of how you manage those things. Of course, the problem with an earthquake is that it's sudden and unexpected. The advantage that we've got when it comes to things like sea level rise or increased flood risk is that we've got some level of predictability and at least a rough sense of timescale, and that gives us a significant advantage in terms of how we plan our forward actions.
Climate Change Minister James Shaw with our political editor Brent Edwards. This is NBR Interviews, featuring great interviews popular with NBR subscribers. A damning Financial Markets Authority report has called out the attitude of fire and general insurers towards conduct and culture, with just 2 of the 42 companies meeting its expectations. And thousands of customers will now receive refunds after being overcharged. Joining NBR's Hamish McNichol recently was FMA's Director of Banking and Insurance, Claire Bollingford.
Back in 2018, when the Australian Royal Commission began, we agreed in New Zealand that we should undertake some reviews into culture and conduct to make sure that the same sort of practices weren't occurring. We started with the banks and then moved on to the life insurers. And after we published our life insurance review, we did write out to all fire and general insurers at that time to ask them to review their own practices and to make sure that they were treating their customers fairly.
And they've had, 18 months to respond,
About
roughly?
18 months to respond. So we asked for insurers to come back to us with the results of that review at the beginning of this year, and our thematic report is based on those responses.
And what was the response like? What have you found?
The response was disappointing. A number of insurers have made good progress towards improving their practices around culture and conduct, but there are a significant number that have an awful lot of work to do.
What were some of the main shortcomings or areas that needed more attention or fixing?
So I think in terms of the shortcomings, it's very similar to what we've seen previously in the banks and the life insurance market. So what we haven't seen is systemic misconduct of the nature that we did see in Australia when the Royal Commission reported. But instead what we've seen are weaknesses in controls, which have led to some customers missing out. And what that means in practice is that they haven't received discounts that they were promised, or indeed there is a small number of customers that were overcharged premiums, or may not have products that were suitable for their needs at the time.
Right, and so is it obvious why some of the stuff is occurring just yet, or?
Well, I think what we've seen is that those firms who have taken on board the findings of previous reviews have done good work to make progress on improving their culture and conduct. But unfortunately, there are a number that did not take those messages on board and did not provide us with adequate responses. Because we have a new regime coming in, they are going to have to do a lot more work to bring themselves up to standard.
Yeah, I saw there was a line, I think, in the report that many firms claimed they didn't think there were any significant issues before this review, and I also know and have heard you before warn the sector about, they've repeatedly been told that this is an issue that they need to look into. I mean, why is that message not getting through? Do they just not care, or what's
It's very difficult for me to say. Yeah. I think from our perspective, we'd hope more progress had been made on some of these issues than has been, in fact.
And FMA, you guys don't tend to name names in these sorts of reports, but have in this one. Is that maybe to hopefully provide a little bit of extra incentive to get that compliance.
That's absolutely right. I mean, I think what we did see is that the companies that have taken this seriously and have put in the hard mahi to get themselves ready for the new regime, we want to recognise that. And we also think that provides some good practice that can be shared across the industry as well. There are a couple of instances, in fact a few instances, where multiple firms have put some good practices in place, even if they're not all quite up to the level that we would want them to be. But those practices, it's helpful, we think, if those are shared and celebrated.
So what's next then? Obviously this new legislation coming in, what's the sort of the timeframes and how quickly are you expecting people to react to this?
Yeah, so we've written back out to the insurers that took part, and for those that haven't completed all the actions that we asked them to do, we are reminding them of the need to complete those and expect them to do so before the new regime. The legislation's still in Parliament at the moment.
Early feedback on you going back to the industry and what you found?
In terms of the response from the industry, I think overall as a sector, there was some disappointment when we provided the feedback, but they do recognise that there's more progress that needs to be made.
FMA's Director of Banking and Insurance, Claire Bollingford, with Hamish McNichol there. You're watching NBR Interviews, compiled highlights of recent NBR video interviews. The disconnect between cleantech innovators and customers is the driving force behind the creation of a new cross-government partnership to create more profitable businesses in the climate innovation space. NZ Cleantech Mission is a partnership between Callaghan Innovation, Auckland Unlimited, New Zealand Growth Capital Partners, Science for Technological Innovation National Science Challenge and Auckland Uni Services. Joining NBR's Andrew Bevan was Callaghan Innovation Cleantech lead James Muir.
So we talk about cleantech innovators. These are high-tech businesses that are creating products, processes and services that will help address issues such as climate change and other environmental problems.
Mm-hmm. And can you tell me about this NZ Cleantech partnership, what it's trying to achieve?
Sure. So the Cleantech partnership is important because for the first time, a number of organisations have come together and said, we believe that technology is really, really important to solving climate change and other environmental problems. And so what the partnership has done is we commissioned an independent report, and we have been looking at the facts that we have as well and understanding the size of cleantech innovators. And we've identified a really, really important problem here. And the problem is that the disconnect in the ecosystem. And when I say ecosystem, I mean how innovators, customers and investors work together to develop these clean technologies. And there's basically a disconnect in New Zealand. And what this independent report that we commissioned helped us understand was how does the New Zealand ecosystem compare to that in other small advanced economies?
And my take is that it doesn't compare that well.
It doesn't compare that well. So we've always known that it probably doesn't compare that well, and you might remember the New Zealand Productivity Commission came out with a report called Frontier Firms, which assessed how New Zealand's going compared to other small advanced economies. So it's not like this is big news. But from a clean tech innovation perspective, it's really, really important to understand the dimensions of this. So clean tech innovators in New Zealand are raising 95% less funding than their clean tech innovators in small advanced economies such as Finland or Switzerland or Israel. And then the problem isn't just one of being able to raise money. The question is, why aren't the clean tech innovators able to raise as much money? And that really comes to the challenges clean tech innovators face in terms of connecting to the global market. So when we say clean technologies, clean tech innovators, we're talking about solving environmental problems, including climate change, in New Zealand and the world. That's where the market's opportunity is in the world.
And so what can the NZ Cleantech partnership do to fix that disconnect? You sort of touched on that before.
Yeah. So what we're going to do is really start to work on the partnership because we know there's plenty of early stage investor interest in New Zealand to invest in these clean tech innovators. What we're really focused on is the partnership that can be developed between clean tech innovators in New Zealand and New Zealand corporates. And if I can, I might explain that a little bit more as well. So imagine that you and I, we have a clean tech company. We've developed a technology and we want to raise some money from the USA or Europe, some proper serious money so we can scale to a global market. But the problem is that we've never tested our technology in the wild, as they call it, tested it for real. But what cleantech innovators really need to test their technology in the wild is generally a New Zealand corporate, a corporate which is prepared to partner with the innovator to solve a problem which the corporate might have. And once it's proven in the wild, then the cleantech innovators' job of raising money and scaling internationally is much, much easier. And at the same time, the New Zealand corporate benefits because it has made good progress on solving an environmental problem.
Who are the big cleantech success stories out in New Zealand? I mean, off the top of the head, there's LanzaTech.
Yeah, I mean, LanzaTech is a famous one. I mean, but I don't think we can really claim LanzaTech as a particularly relevant example here. Okay. They developed their technology a number of years ago, and they've gone offshore. And by going offshore, they have connected with a much larger market and raised more money. We could also talk about Allbirds as well. So they've used some innovative techniques with natural textiles, obviously playing to New Zealand's strengths, and they of course have scaled offshore. But I think we can also talk about more kind of earlier stage examples which appear to be going really well. So if we talk in the agricultural space, let's take Ubco. So they develop rugged electric bikes. Now, nowhere in their website, as far as I could see anyway, do they tag themselves as clean tech. But by switching from a conventional a conventional bike used on a farm, they've moved to an electric bike, we make an incremental difference to the greenhouse gas emissions of agriculture worldwide. That raises another really important point because clean tech isn't about addressing the largest point sources of emissions. What we really need is serious transformational change across the economy, but also we need to nibble away at the smaller sources such as motorbikes or boats. So you could think about ZeroJet as well, which is creating an electric propulsion system for relatively small boats as well. And then you will have seen that Team Emirates New Zealand as well has said that they'll develop a hydrogen chase boat for their next America's Cup. So what we're seeing is, and that's the exciting thing about innovation, is that you see these changes happening right across all the sorts of products and services and processes that we develop here in New Zealand.
Callaghan Innovation Cleantech lead James Muir with the NBR's Andrew Bevan there. This is NBR interviews our subscribers have been watching at nbr.co.nz. I'm Paul Brennan. A knockout inflation figure has all but locked in an increase in the official cash rate next month. Fat Profits Head of Research Greg Smith says. On Friday, July 16th, Statistics New Zealand said annual inflation in the year to the end of June jumped to 3.3%, more than double the 1.5% recorded in the March year. And Fat Profits Head of Research Greg Smith joined the NBR's Hamish McNichol.
You've got the RBNZ, probably one of the first central banks to raise rates, probably next month. I think there's about a 90% probability according to the markets at the moment. And look, I think they're quite right to acknowledge. Obviously, we've had a strong recovery post COVID, or in the midst of COVID, I suppose you'd still say globally. But and the question is whether the inflation is transitory, like a lot of central bankers are saying, or it's a bit more permanent. I think the latter, and I think possibly the RBNZ agrees as well. And obviously they preempted that with in terms of the inflation numbers that we saw, and I think any doubt about whether there'll be a rate rise very, very soon was completely put to rest with those inflation numbers.
Yeah, economists I think had already brought forward expectations from November roughly to about August for the hike, and now, like you say, on Friday we saw annual inflation hit 3.3% in the June quarter, which was above expectations. Pretty much certain now that we'll see a rise in August, do you think?
Yeah, I think so. Look, an absolutely knockout number, highest in a decade. Beating bullish expectations, going above the RBNZ band. So I think that pretty much locks it in. If you look at where it's coming from, obviously no surprise, petrol, we have oil going above $75 a barrel. Is that going to go down anytime soon? I don't think so. It looks like OPEC has sort of got their act together and are quite happy with oil prices where it is. I'm not saying they're going to go above 100 or anything like that. And then, of course, property prices, we know they've been going gangbusters. They're obviously not a component of the CPI, but building costs are, and they were a big driver. Are they going to head back down once we get back to normality, whenever that is? I mean, possibly. You might obviously going to see some of those supply chain blockages ease, but certainly we're going to be living with those pressures for a while. And then obviously other drivers, commodities generally are heading higher. we're heading towards full employment, wage pressure growth as well. So, I think this inflation is here to stay, and I think, the RBNZ's making the right call and being very pragmatic in doing so if it does increase rates next month, which I think they will.
So as that story continues to roll out then as well, what might we see in terms of how the share market reacts, or what might the story be longer term there?
Look, I think, the New Zealand share market hasn't exactly shot the lights out this year. It's underperformed. After performing well for many, many years, it's flatlined a bit. I think, you're going to see maybe a bit more rotation. I mean, rising rates. And this is all curious because we actually last week saw the 10-year treasuries, you look at the US, actually fall. They're 1.3%. So the bond market is telling us that inflation's not going to be a problem in the years ahead. But we're getting all the signals that we are getting inflation. So look, I think markets will acclimatise to that fact that inflation is perhaps here to stay. We're going to probably need further confirmation from data prints globally to see that. And I think mild inflation is positive for stock markets generally, as long as it's well controlled. I think what you might see is maybe a little bit more of a rotation away from some of those growth names. I think we saw that on Friday on the NZX. I suppose higher valuations, the ask becomes even bigger with rising long-term interest rates.
Further afield in Australia, we've seen lockdowns sort of come back to the fore. How close an eye should we keep an eye on that, do you think? In terms of...
we should. It's definitely something to be mindful of because we're getting, obviously in Australia, a lot closer to home. Victoria's now gone into a lockdown, joined New South Wales. So that's going to have a big economic impact for Australia and actually a little bit of a game changer probably. I still think the RBA increases rates later next year, but they'll probably tweak that taper that they were looking to maybe ease off in November because of the economic impact from these lockdowns. So they'll be hoping that it's not extended beyond say the end of this month, but certainly going to have an impact. But although the Australian market's sort of taking its stride, a bit of a rotation away from travel names and the like. Mm-hmm. But during that, economy's tracking pretty well as well. In fact, unemployment went below 5%. That might tick up a bit during the lockdowns. But this Delta variant is something to keep a close eye on. We're hearing talk of second, third, fourth waves in various parts of the globe. And it reminds us how fortunate we are to have been successful with an elimination strategy.
Fat Profits Head of Research Greg Smith with Hamish McNichol there. You're watching NBR Interviews, compiled highlights of recent NBR video interviews. Now the book review by Neville Gibson. The book is 138 Dates by Rebecca Campbell. And Neville joined me in the NBR studio.
She was actually born in Scotland and immigrated with her parents when she was aged 3 and was educated at Wellington Girls High and also Victoria University. But while she was at university, she ran a successful concert that raised money for youth suicide, an issue that she felt wasn't getting the profile. And that led her into a career in music, and it took her to Sydney when she was in her early 20s.
And she had some quite innovative ideas that I guess were new at the time to bring audiences and customers to musical acts.
Yeah, the secret here was to offer a discount if you made a recommendation. So when she sold tickets for the concert, she realised that the best way to do that was for people to recommend that, and then they got a discount. And that widened into a business. When she sort of got out of the music business, which was Scorpio Music, which was both a booking and a website and recording, she started another business called Posse.com, which broadened this out so that it included restaurants, hairdressers, all that kind of thing. And again, it was a kind of Facebook group, if you like, where the incentive for the retailers was that they got a firm customer base and didn't have to depend on one-offs like Grab One, that kind of thing. And also the people who are members of the group got things cheaper than others.
You hear the term serial entrepreneur quite often these days, but she sounds like she kind of, is one now after all these efforts along the way. But and we can talk about some of those, but let's get to where the rubber hits the road on the title of the book. And that is that while all this is happening, the body clock is ticking.
She was midway through her 30s with Posse.com when she realised that hey, I haven't had a date since she had a boyfriend at university, but he was tragically killed in a car accident. So that sort of ended that end of her relationships with men, and decided that she'd go into the dating business. And she takes a very serious one. She had at that stage raised millions of dollars for a business both in Australia and in the United States, so she knew her way around, and it's quite interesting looking at it from her side, the inside story of how she set up these 138 dates, which ranged over a number of years before, of course, there is a happy ending on this one.
And she had a sort of like a procedure that she sort of worked out as she went on to, I guess, vet the...
She certainly did, because she started off on a website called eHarmony and then moved to Tinder. And, of course, people falsify a lot of the details there. So she would make up to 2 or 3 phone calls to check out the potential date before agreeing to it, and she had some basic questions there. The initial dates, was always a drink, never a meal, and it was always held at a regular place that she knew, but she didn't want the people running that bar to know that, to let on that she was a regular, so that each date could be treated as a kind of first date, even though everybody knew her at the particular place she chose.
And you mentioned some of the experiences she had on some of those dates.
Yeah, well, in the early part of the book, the initial dates, they get entire chapters, and you really learn some interesting things. One was I didn't check out whether it's his real name is, because a lot of these people have got assumed names and their identities aren't sort of given. But he was a senior politician in New South Wales, and that date lasted for 6 weeks, which is about the time when you decide, we're getting serious here, sleeping over, that kind of thing. But he was distracted by politics and basically didn't make the call in the morning and left early. And the only time he contacted her was a speed dial, and all she heard was what was going on at the meeting he was in.
And some of them threw around reasonable amounts of money.
Yeah, they're not so much dates as people involved in venture capital, and she has a lot to say about how to raise money and the kind of people involved. All of them tend to be white guys, and they hit on the women. And two drastically bad dates, if you call it that, were with men who had the money and expected something in return. One of them didn't actually. I mean, he was so distracted in his own sort of business, he didn't really care whether she was a woman or who she was.
And she has quite an interesting way of describing some of these people. That sort of cookie cutter, particular hairstyle, very white teeth, particular age. She really categorises some of the VC venture capital, and she's talking about Silicon Valley, really, isn't she? That sort of area.
Yes, in 3 days in Silicon Valley, she visited 16 of these VC outfits, and of course they're world famous. And she says that every meeting she went to was the same. Basically said, yeah, we'll look at it, that kind of thing. And it was a bit like the dating game. You do a question and answer.
Which she had experience with.
That's right. And they always say, well, we'll get back to you, which of course none of them did. But by doing that, she became pretty well known because she already had quite a strong profile. She had a New York Times column for a while under the label of being the boss, and through those contacts she was actually able to meet some genuine people who did come in and back the business.
We'll get to the happy ending in just a moment, but things worked out in the end for her. Was it the Posse concept?
Posse.com merged with Beat the Q, with just the letter Q, and then became part of Hey You, which was run by Westpac. So it's still continuing using that same insider recommendation thing, but much larger business. But at that point she sort of dropped out of the business. And
just shows you if you hang in there.
That's right.
You can get there.
And she eventually got there. 138 was a guy called Rob, who's now a father of 2 children, and they're living in back in New Zealand, where she's got some book launches coming up in the coming week.
And the full review of Rebecca Campbell's 138 dates is at nbr.co.nz right now. And join me again soon as we showcase the best NBR video interviews in NBR Interviews. I'm Paul Brennan. Thanks so much for watching.